The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. on Tuesday. We got about 24 minutes to go until the start of trading. You got markets in negative territory, giving back some of the gains of yesterday. We jump into the S&Ps right now. Overnight, you started about 4,300. We ended the session yesterday at a price point of about 42.94. We inch over 4,300 at about midnight Eastern time. Since then, you're down about 30 points. We're trading at 42.69, right where we were at about 3 a.m. Eastern time in the S&Ps. NASDAQ 100, quite a charge higher. You look at the lows pre-market Monday morning, yesterday, 13,184. You charge up to a high last night of almost 400 points to the tick. We make it to 13,583. We've backed off a bit. You're off 100 points or more. 13,462 from the highs, negative 73 points on the session. We get the Dow off 203 this morning. Dow yesterday trades above 34,000 from about 33,200. You're talking about 800 points to the upside in the Dow. We've backed off a bit. You're negative 200. Russell is negative by about 0.2% right now, 1937. Bitcoin, about 40,330. We were down to 38,000 yesterday. Crude, under $100, but a little bit of a charge higher from the lows. Crude charges higher with the market yesterday. We charge higher this morning. 5 a.m. We're trading at $97. We're right near 100 right now at 99.77. Gold contract up about $10 at 19.06, up $10 exactly right now. We were at a low of 18.91 yesterday in gold, and we jumped to notes and bonds. The trend continues. Higher price and lower yield. You're talking about a 10-year right now up 20 ticks. Last Friday, folks, you're talking about 2 full points. Just remarkable moves in the bonds, the notes, the 10-year, the yield. The 10-year up 2 full points from where we were trading at. Let's get the exact, where were we? That's about 8:45 p.m. Eastern time, Thursday evening going into Friday morning. Friday at about 5 a.m., you were trading at 118.11, basically 2 points above that level. We were on our way to a 2% yield on the 10-year, and just that quickly, we're under 2.75. 2.747 right now, so just under 2.75% the yield on the 10-year. We take a look at the 10-year on a daily. Now, I've been talking about this trend line. Goes back to August of last year. We break out of that trend line March 14th. You really start the trend to lower prices and higher yield on March 7th. Remarkable that you traded from about 129. Okay, what is the high? 129.04. So even above that, almost 11 full points in a month and a half. Remarkable. The point being, folks, you may get a bounce back. You may get a bounce back within this channel line. I imagine you will test that channel line at some point. But putting things in context, okay, we are up 2 full points from the low. But this move, folks, has been pretty dramatic, as in a bounce that's possible even in a market that is keeping higher prices and lower yields coming at you. Okay, we're still talking about 2 full points above where we're at right now. It's just a 382 of the entire move that we've had from March 7th. Maybe we get a little bit of a consolidation, let alone where we've been and where we've come from the beginning of the year. When you have the 10-year trading at 130 and change, we're a solid 10 full points from where we started the year. Higher yields coming at us in a big way. Right now, though, we got a little bit of a reprieve, 2.75%, the yield on the 10-year. All right, we got some big tech earnings coming up today. We got some earnings already out. Let's jump around to what we have going on, and we'll start it off with Pepsi. Coca-Cola crushed it yesterday. Pepsi, they raised the revenue outlook as earnings beat estimates despite higher costs. $193 million impairment charge after taxes, that having to do with Russia, raises the full-year forecast for organic revenue growth. They top estimates the numbers, $1.29 versus $1.23. I mean, Coke crushed it on revenue too, man. Just huge beats on revenue for these companies. $16.2 billion versus $15.56 billion. Percentage-wise, it's huge. I mean, that's an extra $700 million, folks. And that's for a company that's only taken in $15.5 billion, percentage-wise, just a ton of extra cash coming in. Net income, $4.26 a share. No, excuse me. Yeah, $1.29 a share is what they made. $4.26 billion, or $3.06 a share. First quarter net income attributable to the company. Yeah, and there it is. Net sales rise 9.6% to $16.2 billion. Organic revenue climbed 13.7%. North American beverage business volume growth of 3%. First, the launch of Pepsi's foray into alcohol with Hard Mountain Dew, made in partnership with Boston Beer, good old Sam Adams. I have not seen Hard Mountain Dew at the store just yet. Be interested to see if that takes off. I was a Mountain Dew fanatic when I was about 18, 19, 20, 21, maybe even a little older, 22, 23. Soda, probably one of the worst things you can consume. Alcohol, probably one of the worst things you can consume for you. They're going to combine the two with Hard Mountain Dew. We'll see. Frito-Lay North America saw volume increase just 1% in the quarter, although the segment's organic revenue climbed 14%. Doritos, Lay's, Ruffles, and Cheetos all saw double-digit revenue growth. Not exactly the healthiest foods to be growing at that degree. Quaker Foods was the only business to report shrinking volume during the quarter. They had struggled to hold on to consumers. It gained during the early days of the pandemic when more people were eating breakfast at home. It gained market share in rice and pasta, light snacks, ready-to-eat cereal, and snack bar categories. It's interesting going over all of this because, you know, this is our trend. This is how we are coming out of the pandemic, when our certain habits changed, and they are changing again as we're finding a new normal coming out of the pandemic over the last year. So it's interesting to see where those trends are going to settle as we go forward. We're back to snacking on all the snacks, and we're not going to be eating Quaker oatmeal or Quaker oats anymore. Not exactly what you'd want to see for a healthy society, but nonetheless. Okay, we got Microsoft after the bell tonight. I was thinking it was interesting, man. CNBC, I'm looking at different stories, getting ready for the program. One of the stories, I believe right on their front page, is this story. Yeah, Microsoft, and here it is, right? So they got Pepsi up here to kick things off. We're going to talk a little bit about home prices as the slowdown may be coming, S&P Case-Shiller says. But they got a story up here about Microsoft, and I had to look a second time to make sure it was not a promoted article, because on the day that you get Microsoft earnings, you got CNBC running an article on the front page saying that their $15 billion cybersecurity business is, quote unquote, giving investors new reason for optimism. That's like a opinion take, folks. That has nothing to do with news. CNBC has a lot of opinions out there, even on the TV. That's why I can't stand watching the television version of CNBC. But they put out earnings and some news of the day that I'll pull up. But it's just an example of like, you know, this is not financial news, folks. This should be a paid-to-promote article on the day that they have the news coming out, that you're talking about a segment of the business. Like, yes, okay. But anyway. Security business growing faster than all other parts of the company. $15 billion a year in revenue, up from $10 billion a year earlier. It is interesting, some of these tech companies, man, how many different parts of the business they have that aren't even really accounted when you think about the pure value. Now, Microsoft had quite a day to the upside yesterday. You were trading 270 in the beginning of the session. You were trading 280 by the end of the session. We're well off the highs of 350. You jump over to the Analyze tab. Their numbers after the bell tonight, market's pricing in about a $15 move, so just under 5%. We'll take a little bit of a look at Microsoft when we get back. We'll take a look at Google as well. We'll be talking to our man Kevin Hincks, I believe, as well. Stay tuned, folks. We'll be right back.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right now, negative by 26 points. NASDAQ 100, negative by 93. The Dow off 218. So jumping back to Microsoft. Microsoft out with their numbers tonight. Let's back it up even more than this. That's a year on the daily. This is a 3-year weekly. Quite the charge higher from Microsoft. You come into COVID at about 187, and you actually had quite an acceleration coming into the COVID outbreak of 2020, as in you kick off 2019 actually at 156, right? So you get a quick 20% pop almost. You were up to 190, right? From what we start the year off at about 157. Yes, you're up 33. You're up like 20% on this equity before the COVID sell-off. You come down to about 131. You go up 250% to a high November of 349.67. You chop around for a bit. And since then, though, now we're back right near the 382 of 267. That's still $13 below where we're at right now, but you got down to 270. That's this week. The week of March 7th, you got down to 270 on the dot. Shout out to our man Basil Chapman. And they will be out with their numbers tonight. On the Analyze tab, you're talking about a $15 expected move from Microsoft for their earnings after the bell, trading at 280 right now. All right, folks, let's jump over to our man Kevin Hincks. Every trading day, 12 noon Eastern time, on the TD Ameritrade Network, right here on Tiger TV, 12 noon. Kevin Hincks, Tom White, your host of Fast Market. They break down the day's market action, man. They walk through hypothetical trade setups, and we got a great week of earnings, folks. We got a great week of volatility right now. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, this week, not a real difficult week in terms of topics to cover, right, as this is really a who's who of earnings season for some of these stocks. Today's show, Tommy, just to give you a picture, Microsoft, Amazon, Google, Alphabet. Those are the 3 stocks we'll cover today. I mean, it's a earnings palooza, Tommy. There's just a lot going on in this market, not to mention some economic data, not to mention, all the other things that are looming over this market. So, yeah, we got a busy week here, Tommy.
You look at it, Kevin, Microsoft, about $2 trillion right now. Google, 1.6. You got Amazon, 1.4. You're talking about $5 trillion in market cap just in those 3 companies alone. Interesting action in the market yesterday, Kevin, but I'm going to jump back to the 10-year because quite a little bit of it, a pullback. I mean, I have it up on the daily, and, this bounce is about 2 points, Kevin, from the low of 118.08. We're back to a yield of about 2.75. You've been thrown out there to the listeners here and on Fast Market saying, what if we chop around? What if we're sitting where we are right now, whether it's 6 months from now, 12 months from right now? What do you think about the action with the 10-year? A little bit of a pop, yields back to 2.75% this morning.
Yeah, I'm not surprised that this surge in yields that happened the last few weeks has calmed down a bit. And, just like everything, Tommy, the 10-year note gets oversold. And stocks gets oversold and overbought. The TNX was overbought. The 10-year note was oversold. And so that's just a trading opportunity, right? Does that, you can say what you want, but 3% on the 10-year yield is going to be a pretty big matzo ball sitting there on the horizon to get through for this market. And, late last week, there was a 20-year bond auction, Tommy, that had record foreign buyers when they auction these bonds off. So there's interest out there in our bonds and notes, and I think you're seeing some of that play out right now. They were way oversold to begin with, and I think you're seeing just some gravity come back into these, or the opposite of, I guess.
I tell you, even as an individual investor, right, not talking about trading, my head started to get to the point, Kevin, of saying, whether you're dealing with some retirement money, maybe, and we're getting away from the trading aspect of things, this would be investing in my own personal perspective. But when yields start to get to 3%, Kevin, and the market is having some serious volatility, I actually found myself for the first time saying, you know what, maybe a guaranteed yield of 3%. Maybe you can find a little bit better yield if you go outside of the guarantee of a 10-year note. But it was interesting that as the market's been struggling a little bit, maybe you have risk to the downside for the next foreseeable future with rate hikes going up. I said, maybe it's something I'd consider. It was just a shift in my head. And maybe that's what you're talking about overall, because I imagine as those yields rise, we got a little bit of market turbulence with rate hikes coming at us. It's just an interesting thought process. I'm going to jump to Pepsi. So I know you have a serious history with Pepsi, man. They're out with their numbers today. Pretty strong numbers, man. You're down like $1 or $2. What do you think about Coke and Pepsi? Pretty strong numbers, man, in terms of both of them coming out with their numbers in the last couple of days.
Yeah, there's a reason why those two names are considered consumer staples, right? Because if you look at the portfolio of products out of Pepsi, I mean, there's not a salty snack in this world that they don't make. Basically, everything that ends in the word Edo is made by PepsiCo. And, I know what the name of their company says, but they're really Frito-Lay in many ways, right? What's hidden under the term PepsiCo is Frito-Lay. So that's the lion's share of their earnings. And, salty snacks are more popular now than they've ever been, Tommy, as you know. As sugary drinks get less and less popular, salty snacks still remain enormously popular.
Yeah, and Coke had some, what were they shifting to? Was it Powerade? I forget, but it just wasn't the sugary drinks, right? It was being, the ability
drinks,
to shift.
Energy drinks, yeah.
Totally, man. And yeah, I had the article just on CNBC, Kevin. Frito-Lay saw volume increase just 1% in the quarter, but organic revenue growth climbing 14%. And what did they do? Doritos, Lay's, Ruffles, and Cheetos all saw double-digit revenue growth. That's what I was talking about. Not necessarily good for maybe the health of the society, man. But Pepsi, they're getting it done. And we got plenty of those bags in my house, folks. That's the bottom line. So, Kevin, you're talking about the three big stocks today. And was that in each segment that you're going to be talking about those, Amazon, Google, and Microsoft?
Yes. Microsoft in the first segment. Folio is going to do a presentation on Amazon, and then we'll look at Google Alphabet in the final segment. And think about this, Tommy. 2 stock splits coming up in those final 2 names. Pretty interesting scenario here. Both 20-for-1 stock splits. So that'll enter into the conversation as well.
Nice. Stock splits becoming all the new rage these days for obvious reasons, man. They're getting rewarded. We'll see if it stays that way once they actually split. Kevin, we appreciate the conversation, man. We look forward to the program today. 3 big names. They could drive the whole market, man, depending on how they come out this earnings cycle. You have a great day. Have a great program. We'll be watching Fast Market at 12, Kevin.
Thanks for having me on, Tommy. Have a great day.
You too, man. Folks, check it out. If you haven't watched the program, if you don't watch it every day, this seems like a great day to check it out with those three big names. Because, yeah, they're all coming out soon. We got Microsoft today after the bell, as I mentioned. You jump over to the Analyze tab on the Thinkorswim platform. And as it is, so I jump over to the Analyze tab, folks, but on the Trade tab, okay, it's right there as well, because if you're trading, there's the move that is priced in. That's the market maker move, okay? It's the market maker expected move that's priced in for this event that is on the horizon. For Microsoft, you're talking about $15. Then you jump over to the Analyze tab. You can look at the fundamentals, but you jump over to the Earnings tab. It's right there as well, okay? Earnings, they're out after the bell today. They give you a historical perspective of how Amazon has fared versus implied and historical volatility. They give you an at-the-money straddle. Okay, and then they give you the actual earnings versus what Wall Street was looking for. They show the trend lines, and yeah, these companies, you talk about trend lines when you talk about earnings going up. Microsoft looking for the $15 move. You jump over to Google shares. Google, $166 move, okay, but you're talking about a $2,465 stock. They're out with their numbers today as well. And Amazon, going to be out with their numbers on Thursday. Similar, $168 move. Stay tuned, folks. We'll be right back for the open.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps, negative 29 points to kick off the session right now. Keeping in mind, though, we're still 65 points off of the lows we had yesterday. Some of these moves, folks, they look so dramatic, or lack of dramatic, Wanted to point this one out, coming right into that 382 area. And as we go below that, S&P is negative 31 right now. You're talking about a NASDAQ 100 negative 93. As I mentioned, we got a big day of earnings coming up. So we jump over to Microsoft shares. Microsoft trading down with the market now, about 1% in the red right now. I mentioned, let's see how it resets. So this market maker expected move on the Thinkorswim platform, folks, only gets reset according to option pricing, which is only active during market hours, okay? So that number's updating from 9:30 a.m. till 4 p.m. Eastern time. The entire time the option market is updating the implied volatility that it's pricing in. 4 p.m., those numbers lock. They start trading again at 9:30. So now you're getting the number live as of today. And it would make sense that there's a little bit of a less of a move priced in when you think that more time has eclipsed, but as we get some negative market action, you're actually seeing implied volatility being priced into all option products, okay? Because you think about it, VIX will be going up if the market tanks. The price of options usually goes up in that scenario if the VIX is going up. As a result, you're going to have a larger move expected for earnings because there's a larger move priced in across the board on all products assigned as the market is selling off. Dow off 316 right now, Russell off 20. Let's jump over to commodities. Crude above $100 at 139 cents. Gold contract catching a little bit of a bid as well. We got gold up to 1910 right now. You were down to 1891 on yesterday. So we talked about Microsoft. We jump over to Google shares. Google's down about 1% as well. Google out with their numbers today as well. You're talking about $175 move priced into that equity for earnings. And then we take a look at Amazon real quick. Amazon out on Thursday. You're talking about $180 move. Huge moves. Very interesting. As Kevin mentioned, hadn't thought about it recently. They'll be talking about it on Fast Market. 2 splits coming up. Forget the actual date that they're going to happen. Amazon and Google both going 20 for 1, man. If you're at $3,000, you're going to be trading at 150. So both of those stocks just under $150 is what they'll be trading for if they split at these prices. Yeah, that or thereabouts. All right, let's jump around to some of the other stories we have up here. All right, where are we going? I got it up here. Hold on. Here we go. I wanted to talk about home prices, man, because this one, you talk about some... to steal the line from our man Kevin Hincks, video game numbers, folks. Home prices jumped nearly 20% in February, but the slowdown may be coming. Now, here's what you got to keep in mind. If inflation's up 8 to 9% alone, okay, then the value of assets should be rising at that level, okay? So, yes, real estate prices seem like they're bonkers, and sometimes these numbers are. I actually chuckled at some of these numbers, folks. Phoenix, Tampa, Florida, and Miami saw prices of 32.9, 32.6, and 29.7 respectively. Bonkers. 32.6% in a year. I mean, you're talking about assets. If you're valued at $300,000 12 months ago, you're valued at $400,000 today. That could be topping, okay? For investors, my dad's been talking about it, all right? You have yields rising, a slight reprieve today, but yields rising. As an investor, you could see some topping action, folks, all right? You don't have to be a brilliant person to see some of the rises. I mean, you take a look at many of these homes, folks, okay? Excuse me, you're talking about parabolic moves to the upside. Our man Basil Chapman's coming up next. Parabolic moves, usually, maybe not usually, sometimes they form the parabola on the other side to complete that formed symmetrical formation. No matter what, folks, though, you're talking about some pretty substantial moves. As a homeowner, though, okay, it's a little bit of a different scenario because rent prices are through the roof as well. You got to live somewhere. We're still in a period of inflation, so don't go out and just sell your home, okay? If you're over leveraged with investment properties, might not be the worst time to scale things back a little bit, as we're still rising so dramatically, okay? When these numbers, folks, it's just, you can't go up 33% in a year over and over. And you're talking about just across the board. Even with Tampa up 33%, the 10-city composite annual increase came in at 18.6%. It's still rising, folks, up from 17.3 the previous month. The 20-city was 20.2, up from 18.9. Video game numbers for Phoenix, Tampa, and Miami, all around 30%. I mean, Tampa, 32.6. That's just amazing. Minneapolis, New York, and D.C. saw the smallest price gains, still double digits, though, okay? The macroeconomic environment is evolving rapidly and may not support extraordinary home price growth for much longer. That is the managing director at S&P DJI in a release. Post-COVID resumption of general economic activity has stoked inflation. Fed's begun increased rates. We're all aware of this. We may soon begin to see the impact in increasing mortgage rates on home prices. Well, we've already seen the impact, all right? It's at about 5%, and that is a substantial impact. For the medium-priced home, financed with a 30-year loan, the monthly payment is $550 higher than a year ago, an increase of 46%. Now, I think the math that works out to somewhere there is a year ago, and I'm ballparking these numbers, but I remember reading the CNBC article that these came from. A year ago, the average home was priced at $275,000, median priced, okay? Not average, median priced home, $275,000, let's say, at a rate of 3.5% or something like that. That equation worked out to a monthly payment of about $1,150. Fast forward today, the median home price sale is up to $350 or $325 at an interest rate of about 5%. That is yielding a payment of $1,750 or something like that. $1,700. So you go from a payment of $1,150 to $1,700 for the median priced home. Doesn't matter what the variables are you're putting in there, okay? That is the median priced home. Excuse me. And it's not going to be the median priced home if people can't afford it because the payment is almost 50% higher. I mean, imagine a year ago, you were paying on a monthly basis $1,100 a month. Now you're paying after tax income $1,650, $1,700. It's a staggering increase that's going to hit most people. You're either going to buy less of a house, okay, or you're not going to buy a house. The tough part of the whole equation that's not even involved in those numbers is that rent has gone up dramatically as well. All right. So yeah, it's a tough situation, but if you're going to have to live somewhere, folks, don't go selling your house, okay? If you're over-leveraged on investments, it might be a time as you see these numbers. Because these numbers in particular, very fortunate to live in Florida. The wind is at our backs, and it will be for some time, having a state with no income tax, beautiful area, etc. It used to be lower cost of living. That's one of the reasons that brought me down here. It's gradually shifting as people have the ability to work from anywhere, okay? But it's always going to be something right now, especially from the areas in Boston that I'm familiar with. Part of the reason why I came down to Florida was simply the cost of living. As somebody that was 24 years old and looking for just apartments, man, you talk about apartments. I had to get far outside of the city to be anywhere near what I could afford, as opposed to in Florida. I was right near Tampa, man, right near where the Lightning play, right near all that stuff. In Boston, not even possible. You got friends sharing apartments 3 or 4 at a time just to be able to afford an apartment somewhere. Beautiful areas, all right? Brookline, too many to name, right? But then one of my friends, a bunch of friends had a nice apartment in Brookline, right on the T there. You could jump in the city. Yeah, I imagine that place is probably going for $4,000 or $5,000 a month right now to rent. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got a little bit of a sell-off continuing. S&P's right now dropping. We're back to 42.51. You're negative by 42 points. The NASDAQ 100, man, that's a drop-off for you. There's 200 points to the downside. Taking a look at where we are yesterday, we were down to 13,184 pre-market. During the trading day, you made it down to about 13,250. We'll call it ball mark, a little bit lower than that, 13,243. Point being, we're only 100 points away from where we were at the lows intraday yesterday, and that is after charging higher by about 350 points to the upside. Now we've given back about 250 of those points. Dow off 292 right now. We jump around to the two equities with their numbers today, man. Google dropping fast, down 2.5% for Google. Microsoft down 1.6%. Amazon on Thursday down 2% right now. We jump over to Apple shares down 1.3%. Tech stocks getting hit. We jump over to Tesla shares down 2.2% right now. All right, let's jump down the line and see what else we got going on. We talked about Pepsi. GE, they top estimates in their quarterly report, but they fell 3.5%, confirmed its full-year previous guidance, said it sees challenges from inflation and supply chain issues. Well, yeah, welcome to the market in 2022, GE. Whoo, there's a drop-off for you, down 8.6%. Maybe the market a little bit worried about what they had to say in terms of seeing some challenges. Boy, so much for a revival. You're down to $82 right now, well below where you came into COVID for GE. Yeah, let's take a look even longer. There's your 5-year weekly. I mean, it's a scary area that you're into. You chop around, you could be at $60 in no time, as you see on a couple occasions on GE shares down 8.6% on their numbers today. Yeah, looks like the conference call not going well that began about 8 a.m. Eastern time. Okay, UPS, they're a little bit higher. They beat analyst estimates, top and bottom line. Adjusted earnings 305 on $24.38 billion. Look at the beat that they had on revenue, man. These companies, they're beating on revenue. Costs are higher as well. But, I mean, that's a beat of, what, almost $600 million in extra revenue over 90 days. We jump over to UPS shares. Whoa. That's a tough one, man. This market's getting punished. UPS down 3.4% after trading up to 196 pre-market. Not liking what's going on with the conference call there as well, as they drop right on the open. Maybe it didn't have to do with the conference call as you wait for the opening bell, but 9:15 this thing really dropped. So I'm guessing maybe they said something on that call that began at 8:30 for UPS. Let's see, 3M, let's see how they're trading. Not a good day to come out with your earnings, it looks like. 3M down 3.3% on their numbers. Basically met expectations. They were saying topped estimates. Company saw revenue of $8.83 Market was looking for 8.74. DR Horton, let's see, they beat analyst estimates. Adjusted earnings of 403, revenue of $8 billion. Market was looking for 337 on 7.62. What's their symbol? DHI is their symbol. DR Horton. There's a company that holds on to the gains, up 1.6% coming out with their numbers. SeaWorld, let's see, so they're higher. Rosenblatt initiated coverage with a buy and said despite pandemic headwinds, the company has fared well under the vision of big investor Scott Ross. Seas is their symbol. They're a little bit lower today. Let's take a longer term look at this one. Whoo, look at that one, man. SeaWorld, they are rocking higher to $74. Talking about all-time highs, I think, last week. Let's check out our back. Yeah, look at that. And I would agree, folks. People are going to be getting out. We're talking about in my family, you know, whether it's going to the zoo, whether it's going to Busch Gardens, whether it's going to Disney, whether it's going to something like SeaWorld. They're something that is going to be attractive for some time. Checking back to the S&P, I talked about we're at the 382 to start off the program. We're now at the 50%. You come back down to that 618, you're talking about 42.36, folks. So about 13 points from where we're under right now. That's also the area that you chopped around a little bit in yesterday afternoon before the market charged higher. S&P's right now basically negative by 1%. All right, what else we got? Yeah, so Warner Brothers Discovery out with their numbers. 13% revenue jump, 2 million new streaming subscribers in the first quarter. WBD is their symbol. Down 7.4%. This thing's got some real volatility, man. Yesterday you were trading at 1945. You make it up to 22. You're at 1993. This is a gross chart, though. Up to $78 with the Bill Hwang saga. That company... tough deal going on with some of these streamers, man. You jump to Netflix, down another 2% at 205. You think about it. Netflix opened, folks, at 250 the day after their earnings came out. You had who? You had Ackman selling his position the next day. Maybe he was a huge chunk right at the beginning of the day. Already, what's amazing to think is that already this equity is down another almost 20% from where you opened at 250. Even if you use 225 or so, you're down another 10-something percent, 205. Where the bottom is on that one's a tough one to figure out when their entire business plan has changed and they're going to start selling advertising. You know, maybe at one point Netflix says we can't release all the titles at once. Maybe we have to release them on a rolling basis to keep subscribers from canceling. Anything's in play when they're going to change their business model. It's kind of one of the things Ackman said, that they could not analyze the future expectation of the growth of their company at a time that they were basically changing their entire business model. There was no way for them to accurately anticipate how that would change things. All right. Let's jump around to some of the other stories we got up here. Let's see. So this one caught my eye because I was not aware that flight attendants were not paid during boarding. They're the only major U.S. airline whose flight attendants aren't unionized, and they're going to start paying them during boarding. Usually, flight attendants are paid starting when the boarding doors close. That doesn't seem very fair, but they're going to start paying them. I mean, the hell they have to deal with sometimes at the boarding area alone not to get paid. But nonetheless, they will start getting paid. Jumping to crypto. Fidelity, they're going to offer crypto in 401ks. Be careful out there if you're going to start crashing into 401k money in your crypto portfolio. The first retirement plan provider to do so. Now, I'm a firm believer in giving people the ability to invest how they seem fit and not telling people that they're not smart enough to do whatever they want with their money in reasonable terms, okay? As in, if somebody wants to invest in Bitcoin, it shouldn't just be available to the elites on Wall Street, okay? And you're seeing this happen where already there's this push to say that people aren't able to trade options effectively, right? The gamification of trading. Folks, short-term trading, it's very similar sometimes to a video game. It really is. I mean, when you talk about the technical aspects of looking at a chart, noticing patterns, trading on risk-reward profiles of possibilities, crypto in a 401k is a very dicey game if you're banking on that money being there for a necessity to survive post your employment, okay? If you have enough economic streams that you're willing to take a portion of your portfolio on that, yes. If you're just going to gamble it up and you say I'll work forever, then that's your right as times too. But be careful on this one. It is a huge lift, I imagine, for Bitcoin that this becomes something that you can do. Bitcoin still under 40,000, man. This thing, you take a look at it. We'll draw a little bit of trend line here because you're bumping. We'll finish this up when we get back on Bitcoin because you are bumping up against this trend line on a lower level on Bitcoin. We'll see, 39,905. Stay tuned, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The gold market has taken off topside in a large way. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down 47 points right now. I talked about it. We're coming right down to that area. That might be the next area, 42.36. S&Ps trading at 42.44. Jumping around to some of the other companies with earnings this week. It's easy to get drowned out when you got Google, Microsoft, Amazon, among many others. We get Boeing out with their numbers Wednesday morning. All right, taking a look at Boeing. Might be a nice area, man. You take a look at the daily. This thing's been on a downtrend channel since basically just over a year ago, March of 2021. And you can see Boeing coming right down towards the bottom line of that at about 171. You jump over to the Analyze tab. Market pricing in about an $8.44 move for their earnings. Other earnings we also get. Today, after the bell, we get Chipotle. Check out that chart. Up to 1958, you pull back, chop around right at about 1350. Actually made it to a low of 1277. 382 right at about 1363. Chipotle out with their numbers. That's some serious volatility when you got a $111 move. They're out with their numbers after the bell tonight. Google and Microsoft after the bell tonight as well. So Chipotle not going to get all the headlines for sure. Other companies out this week, we get Facebook out Wednesday after the bell. You jump to Facebook. You're talking about 182 right now for Facebook. Yeah, that is a low, I believe, of anything you've had recently. Made it to 185 recently. Yesterday made it to 181.66, so barely below, back to a 15-minute, but that's quite a drop-off, man. Now, Facebook, you're talking about a $22 move. The market really wants to hear what's going on in the last 90 days for Facebook shares. That is a move, folks. Talking about, what is that, 11%, 12%? Almost on that equity priced into their numbers after the bell tonight. Tomorrow. Facebook tomorrow, April 27th. We got Qualcomm tomorrow as well. Let's see, Thursday, looking at some of the numbers we got Domino's Pizza out Thursday. You got Comcast. Before the market, the big ones, we get Apple on Thursday as well. My goodness, Apple. Look at that, $8 move priced in. They're out with their numbers Thursday as well. So Microsoft and Google today. Amazon and Apple tomorrow after the bell. You got Boeing in there Wednesday morning as well. We got Ford after the bell Wednesday night. Facebook Wednesday night. Qualcomm Wednesday night. Visa is in there tonight after the bell, as well as Capital One as well. We'll finish up with Visa. Visa 205. You're looking at a $9.39 move. Visa down 2.3% today. You put it on a weekly and struggling. Visa right where you're sitting pre-COVID, Visa down 2.3%. It's a huge week of earnings, folks. Stay tuned. We got live programming all day, folks. Basil's up next. Larry at 11. Fast Market at 12. You heard the stocks they're talking about. Steve Rhodes, Dave White, Tom O'Brien this afternoon. Have a great Tuesday.